Howdy, everybody. Welcome to Liberty Call. Today is Thursday, November 30th, 2023. Hope everybody's having a fantastical day out there in the interwebs. It's a beautiful day here in Colorado. Not too hot, not too cold. Still got snow in my front yard, unfortunately. But that'll just take a little time to melt away. So hope you're having a great day. If it is your first time watching Liberty Call, if you could do me a favor, if you could give me some thumbs up, likes, share, subscribe, follow, and press that notification bell. You want to know when I go live. Alrighty. Well, let's go ahead and jump into the numbers. Was a weird day. The Dow was the blue chips were in the green territory, and the Nasdaq was in the red all day, and the S&P 500 kind of went back and forth between the two. So, all right, starting out the Dow Jones, it was up 1.47%, 520 points. It was up closed at 35,950. The S&P 500 was only up 0.38%, closed at 45,67. Nasdaq down 0.23%, closing at 14,226. The VIX was down today, 0.69%, closed at 1289. Canada was up 0.6, Brazil was up 0.92, and Mexico up 2.54%. Wow. In Europe, Germany was up 0.3%, the UK up 0.41, France up 0.59, the Netherlands up 0.4, Spain down 0.04, Italy up 0.16, Switzerland up 0.48, and Portugal up 0.54. Russian exchanges both in the red today. MOEX down 0.24, the RTSI down 1.15. And the Asian markets, the Nikkei in Japan was up 0.43%, Australia up 0.74. In China, the Shanghai was up 0.26, the Shenzhen component down 0.18. China A50 up 0.55%, DJ Shanghai up 0.16, Hang Seng up 0.18, and the Taiwan weighted appears to have been closed today. Been closed a lot. I'm not quite sure why. I don't really follow the Asian markets that closely, so I don't keep up on their holidays and stuff. So anyway, so kind of a meh day again. I've been saying that for the last week or so. Just feels like everybody's just kind of hanging around, waiting for something bad to happen. But we shall see. All right, market recap: Dow jumps as inflation continues to slow. The Dow surged as investors absorbed a continued slowdown in inflation and generally positive corporate earnings. November has been a strong month for Wall Street indices, with the Dow Jones Industrial Average poised to gain 7.2%, the S&P 500 up 8.5%, and Nasdaq up nearly 11%, marking their best monthly performances since October of 21 and July of 22, respectively. Inflation showed signs of slowing, with the October Personal Consumption Expenditures Price Index, the first preferred measure, registering a 0% pace below the expected 0.1%. The annualized figure reached 3.4%, down from the prior month's 3.7%. Core PCE inflation, considered a more accurate gauge, slowed to 3.5% pace. Despite signs of slowing inflation, the 10-year Treasury yield rose 7 basis points to 4.339%. Salesforce Inc. saw an over 8% jump after lifting its annual guidance following Q3 results that exceeded Wall Street estimates. Salesforce's ongoing cost-cutting efforts boosted margins, and the company is expected to continue expanding margins, albeit at a more moderate rate, according to Goldman Sachs. Ford Motor Company revised its annual guidance for 2023, anticipating an operating profit between $10 and $10.5 billion, lower than previous guidance due to costs associated with the labor strike. The U.S. labor agreement with the United Auto Workers is expected to cost $8.8 billion. Fed New York President Williams suggested that the Fed's rate hiking cycle may have peaked, but warned of potential future hikes if disinflation doesn't continue. Again, we haven't seen any disinflation. Everything is still way more expensive than it was 3 years ago. I mean, just because it might be coming down from the peak. And again, I haven't really seen a whole lot of that. It's just inflation has just kind of stopped. Where were we? Tesla Inc. preparing to begin deliveries of its Cybertruck, a significant event for the company, while Microsoft is set to join OpenAI's board of directors, according to CEO Sam Altman. Oil prices experienced volatility after OPEC Plus members agreed to additional voluntary production cuts that fell short of expectations. The plans announced individually by members, including Saudi Arabia extending its voluntary cut and Russia deepening its crude export curbs. The total voluntary cuts amounted to about 684,000 barrels per day, below the anticipated 1 million barrels. All right. So, oil's, the OPEC guys can't decide whether or not they want to really stick to us here in the West or, just kind of be moderate or medium with it all. All right, let's get to our next article here. U.S. consumer spending is slowing, labor market steadily easing. All right, U.S. consumer spending showed a moderate increase in October, while the annual inflation rise was the smallest in over 2.5 years, indicating cooling demand. This data reinforces expectations that the Federal Reserve's interest rate hiking campaign may be coming to an end. Other data revealed a gradual easing in the labor market, with more Americans applying for unemployment benefits last week. The number of jobless roles surged to a 2-year high in mid-November, reflecting slowing demand for labor. The rise in continuing claims aligns with the anecdotal evidence of a slowdown in hiring, although adjusting the data for seasonal fluctuations remains challenging due to the unprecedented surge in unemployment benefit applications during the early stages of the COVID-19 pandemic. I mean, come on, that was 3 years ago. I mean, anyone who wants to be back to work is back to work. Consumer spending, accounting for over 2/3 of the U.S. economic activity, increased by 0.2% last month. While wages remained elevated, their pace of increase has slowed, and millions of Americans resumed student loan repayments in October. This could potentially constrain spending next year. The Personal Consumption Expenditures Price Index showed no change in October after a 0.4% rise in September. The PCE Price Index increased by 3% in the 12 months through October, the smallest year-on-year gain since March of 21. The core PCE Price Index, excluding food and energy components, advanced 3.5% year-on-year in October. Despite these indicators of subsiding demand and inflation pressures, the U.S. economy has defied predictions of a recession, growing at a robust 5.2% annualized rate in the third quarter, the fastest in nearly 2 years. However, growth estimates for the fourth quarter are mostly below a 2% rate, and most economists expect the economy to settle into a period of very slow growth, avoiding an outright recession. Well, that's an interesting way to look at that. I personally think we have a greater likelihood of going into recession, but again, I'm just one guy sitting out here in the mountains. All right, one last article here has to do with the Treasury. As the U.S. Treasury runs out of creditors, its options are dwindling. Because the way our government funds itself is it sells bonds out in the open market, and then dumbass suckers, like foreign governments and, the average everyday person buys those bonds, which then they take that money and then spend it on useless things like, government payroll and, bombs and things like that. All right. The United States finds itself in a debt spiral. The situation seems increasingly challenging. The root cause is prolific government spending, which has surged not only during crises, but also during non-crisis periods. Despite an increase in annual spending by about $1.6 trillion since 2019, tax revenues have only risen by about $600 billion, resulting in growing deficits. As a consequence, the government has been forced to borrow, leading to a staggering total public debt of over $32 trillion, exceeding 180% of GDP. Compounding this issue is the Federal Reserve's move to let interest rates rise, reflecting an attempt to curb inflation. However, with the massive size of debt, this has caused interest payments to soar, nearly doubling since 2020. The Congressional Budget Office projects that these payments will consume more significant portions of the federal budget, exacerbating deficits and requiring more debt to pay off past debts. Furthermore, the U.S. Treasury is facing challenges finding buyers for its debt. The Federal Reserve, a traditional buyer, is reducing its holdings of U.S. Treasury securities. Foreign governments, including China and Japan, are also decreasing their purchases. A recent Treasury auction in October encountered difficulties, and appetite for U.S. government debt appears to be diminishing. Looking ahead to 2024, $7.6 trillion in government debt is set to mature, posing a substantial challenge as demand declines. Possible scenarios include a financial crisis, prompting the Fed to inject new money, a debt crisis causing Treasury yields to skyrocket, or a soft default, where the U.S. government implements measures such as a central bank digital currency to manage its debt obligations. The future remains uncertain, and the consequences of past reckless fiscal and monetary policies may continue to unfold. So that'll be a problem if no one wants to buy the debt so we can pay the bills because we're not bringing enough in revenue from taxes and everything else that the government robs us for. So I personally am hoping it all falls apart because I can't imagine I can imagine a lot of Americans voting to basically slash the federal government to, basically nothing. But unfortunately, there's too many people who live off the government dole, either through a government job, government contracts, or, just straight out welfare. So what are you going to do? It has to fall apart. I mean, that's the only way we're ever going to get out of this, is if the federal government just completely collapses and the states just take back over. And I can't imagine getting 50 states to all agree on rejoining into a republic again, especially looking at what has just happened. I mean, maybe if it was just for the military and it was just for protecting our borders and shores, I'd agree to that. But everything else is just a ruse to, and a boondoggle to rob the tax cattle, as I like to call us out here. Anyways, all right. Well, that's everything I had. I can only ramble for so long. If you need to reach me for anything, go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful evening, and I shall talk to you next time. Adios.